Is crypto cooked? Short answer, no. Medium length answer, short term, it might be, but mid to long term, definitely not. We've got the best regulatory environment ever. Long answer, that's what's in this video. Now let's get into it. If you've been following crypto at all recently, I don't need to tell you that sentiment is through the floor. Honestly, probably the worst I've seen it since 2023, which is kind of odd because if you look at Bitcoin, it's actually hasn't retraced that much, right? It's still significantly above its local top from earlier in 2024. And it's actually even up a lot still from where it was in November. I mean, remember, we were ranging in the 50s, 60s for most of last year. I think part of the reason that sentiment is so bad is that if you exclude Bitcoin, look at the total market cap excluding Bitcoin, then it is down pretty substantially with nearly $500 billion of market cap erased. And so a lot of those, think about it, it's paper gains. People thought they had more money. Now it's gone. And if you look at others, which excludes the top 10, it's down by even now nearly 50% from its local top in December. And that includes a lot of coins that are down 70, 80, 90% because it's not evenly dispersed. And I think part of the reason also that sentiment is so bad is that a lot of people bought crypto back over here, either in the summer or even they were buying it in the bear market, 2023, 2022, and their tokens didn't do that well. Their tokens just didn't perform. And so you understand, right? If you're holding crypto for years and your tokens don't do well, you kind of feel like you got gypped, right? You say, all right, like, I don't know if it's over, but we just had this run up and my tokens didn't move. I thought I was going to make all this money. And the reason why so many people own tokens that didn't do anything is that, to be frank, there are way too many tokens now because of applications like Pump Fun and because of the retail interest in meme coins. Whereas in the past, there were maybe a few thousand tokens, and when the market went up, they basically all went up. Now there's literally millions of tokens out there, and new tokens are spun up. In fact, thousands of new tokens are spun up every single day. And in a single day now, more tokens are created than basically had existed in any meaningful sense, had volume back in 2020, 2021. And so the result of that is not every token can do well. I think this graphic sums it up from this bold Leonidas cartoonist, alt season 2021, pitcher of water, 3 glasses, alt season 2025, pitcher of water with basically infinite glasses. And if you look at Pump Fund data, for example, and this is just one place tokens are being launched, you can see that there's been 7.3 million tokens minted on Pump Fund in total. 7.3 million. So there are simply too many tokens now where there's no way everyone can do well. So while I don't think crypto is cooked, I do think just buying random tokens and making infinite money every 4 years is cooked. I think that every single token offering exceptional returns is cooked. It's going to actually matter what you buy in the future. However, I don't think this cycle is over, and I'm going to make the case why now. So if you look at recent announcements, you have BlackRock CEO saying he wants the SEC to rapidly approve tokenization of bonds, stocks, etc. So you've got the CEO of biggest asset manager in the world saying he's a huge believer in crypto and wants to approve asset tokenization. Now, bear with me for a sec, because I know some people are going to say either they don't think that's going to be a public blockchain, fair, or they say he's here to extract, also fair. But bear with me for a second, okay? So you've got that. Then you've got the new U.S. presidential administration launching this Digital Assets Council, and you've got the head of that, David Sachs, who is a VC, has invested in many well-known cryptos, saying financial assets are destined to become digital, just like every analog industry has become digital, and we want that value creation to happen in the United States, et cetera, et cetera. This will also be much better for consumer protection because it's easier for regulators to supervise an activity when it's onshore. Okay, he goes on to share other stuff, but basically supportive of crypto in the US and establishing some sort of regulatory framework, and there's already signs that that's happening. This is an actual US Senate bill. This is not passed, but just to show you the sorts of things that are being considered. This is establishing a regulatory framework for stablecoins. And so all the stars are aligning for us to get regulatory clarity for crypto and to probably get it this year. The original timeline that was laid out was 180 days. And if you think about it, you've got the financial institutions pushing for favorable regulation now. You've got the presidential administration and this Digital Assets Council pushing for favorable regulation. You've got bills being proposed in the Senate by the majority party that are favorable towards regulation. I don't think there's that many people who are in a position to stop favorable regulation for crypto who are actually in a position to do so now. And so I think we're going to get favorable regulatory framework now, and we're actually going to be able to have real businesses built on chain. And that means trillions of dollars coming on chain. And if you look at, for example, the total value of tokenized real world assets today, 8.5 billion, right? I mean, it's a lot. It is a lot. It doesn't just seem like a lot. It is a lot if you're one person. It's nothing in the scheme of things, right? I mean, there's some of these asset managers, they've got hundreds of billions of dollars, trillions of dollars. And then this is 8.5 billion. Total value of equities is $100 trillion plus. And even if a fraction of that makes its way on chain, that means an exponential increase in the total value of assets that are locked into crypto and deposited into DeFi protocols. So look at this directionally, right? Do you believe that in 1 year, 2 years, 3 years, this number is going to be greater? The total value of tokenized assets will be greater. I believe it's going to be much greater, right? And if you believe in that, then there's every reason to think that crypto and the networks that this runs on will become more valuable. But I know the issue that a lot of people have right now is they say 180 days is too long. They say 180 days is too long to wait. I don't want to hold something that could dip in the meantime. First off, the people who you see that made millions and millions of dollars on Bitcoin, or hundreds of millions of dollars on Bitcoin, they didn't buy it by holding it for 3 months, right? They bought it 10 years ago when no one cared about it, 12 years ago, 15 years ago, and they held it through ups, downs. They actually built a thesis around it, had conviction in its long-term value accrual, and they held it for a longer period of time. 180 days is nothing, right? And I know the demographics of people who watch this channel. It's mostly 25 to 35-year-olds, which makes sense because I fall in that range. And when you're young, you want everything to happen right away, right? You're impatient. But waiting 6 months for regulatory clarity is really nothing, especially when all the signs point towards it being extremely favorable. Think about it this way, right? You're 30 years old right now. You're 25 years old. There's some banker out there who's 60 years old who is seeing this transition happen in the financial markets, is seeing the transition from analog to digital, the trillions of dollars that are going to be tokenized on chain, and wishes he was in your position right now, wishes he was young so he could find a way to take advantage of that, right? He could either build something or invest in it heavily. You actually are in that position, right? And you got all the time in the world, especially if you're young. Given all this, why am I not full porting into altcoins right now? First reason is that there are signs that global liquidity is starting to roll over or contract. And historically, that means bad things for all markets, but especially Bitcoin, crypto tends to be very sensitive to that. You can go back and look at the performance historically over time against global liquidity. And it makes sense because crypto is kind of the most risk on you can be. And so if that retraces further, then more pain for crypto. And if Bitcoin drops more, I think that alts, they've already capitulated, many of them, but I think that if something goes down 90%, it can still go down another 90%. Second reason is you go back to my video from November 8th, 2024. So right after the election, I talked about my plan for the bull market, how I thought the cycle was going to play out, and not to, say that I called everything right, but I did say that I expected a local top before inauguration, and then that inauguration would be a sell the news event. And look at what happened. We had one. I couldn't have predicted the specific catalyst for this, but we had a local top, basically right on on or before Inauguration Day, and then we've been retracing ever since. So it did turn out to be a sell the news event, and then the plan I laid out in this video was that as the actual effects of deregulation and a regulatory framework were implemented, and you saw that being sort of passed through to real businesses being built on chain, then you would see a run up later in the year. So my current mental model is that is still intact. And I think that we see a shift from a cyclical Bitcoin bull run to a secular Bitcoin bull run. I think the full 4-year model has already broken, and many people have realized it, but not everyone has. And here's another reason I think that. You look at major institutions now, like VanEck, right? And I applaud everything they've done. They talk about the halving. They talk about 4-year cycles. And I'm sorry to inform you guys, you don't just get to make infinite money every 4 years forever. In the future, I predict that Bitcoin price, crypto markets is going to be a lot more driven by things like ETF flows, nation states buying beyond just El Salvador, and actual adoption of the technology. You're already seeing this in stablecoins, but I think that's just the beginning. You're going to see the entire financial markets rebuilt on chain. And then the third reason why I'm not going all in right now and why I still think there could be some more short-term pain is we've basically seen every top signal in the book. We've seen celebrities getting involved. We've seen select altcoins, but not all altcoins running many percentages up. If you look at DEX volume, it's gone completely parabolic on chain in recent months. And you've got a lot of people making money, a lot more people losing money. And I think that generally when this sort of thing happens, the universe and the markets have a way of righting themselves. And combine that with the fact that we don't really have many positive catalysts coming until regulatory clarity. We have a negative catalyst coming in the form of FTX unlocks, but we don't have positive catalysts. And so probably you see this mania die down. People who were over leveraged on meme coins get blown out. And then when we've consolidated at a healthier level, we can start to move up again based on stronger fundamentals. And if you believe in the halving cycle still, even though I just said I think the 4-year cycle is becoming less important, that would also align with the traditional peak post-halving. And if you agree with me that the bull run's not over, which are the narratives that it makes sense to get exposure to? Well, the way I like to think about it is, what are some things that I believe to be directionally true? Because if you're right about that, then it gives you a lot more leeway to make mistakes in other places. So one is going to be more adoption of Bitcoin as a store of value. You can see this represented in part by ETF flows, which in cumulative have been growing even as the market has had its ups and downs. You can see this over the past year since they launched. So I think more institutions, more retail investors through their retirement accounts, and then even nation states eventually will be buying Bitcoin, although I don't know if the nation states will do it through ETFs. The next trend is going to be more assets being tokenized on chain. You've got BlackRock saying they want to tokenize the world. You've got a likely regulatory framework for them to do so, and you've got many other players getting involved as well. So the other directional bet I think is going to be real world assets growing, and that includes infrastructure surrounding them. And then another directional bet that I haven't talked about yet in this video, but I've talked about in other videos, is more crypto activity moving from centralized exchanges on chain. You can see that perps volume on chain, so perp dexes, have grown substantially over the past year. In fact, even over the past month, even over the summer, when market activity was cooler overall, they've been dwarfing their peak from 2021. So on-chain perp dexes are playing a much larger role than they did in the past, and I think that's going to continue to grow, and applications that facilitate that, like Hyperliquid, that provide a comparable experience on-chain, will be major beneficiaries. And then the fourth trend is going to be AI and crypto. Current total market cap for that sector is $27 billion, which it's a lot, but compared to the total size of the AI market, it's actually relatively small. And there's so many intelligent founders, builders that are building things in AI and crypto, as well as AI agents in crypto, that I think that this is going to be a much larger sector in the future. That doesn't mean that every single token will do well, but the sector overall is going to be much larger. By the way, if you guys want to learn more about the latest narratives as well as on-chain analysis, data related to the crypto market, check out my newsletter. We have a weekly newsletter for free and then more in-depth newsletters, usually several times a week for premium members. If you want to see more videos like this, be sure to like and subscribe. And until next time, this is Dynamo DeFi.